On March 1st, amid rapidly escalating geopolitical tensions, the euro currency fell below the 1.12 level against the US dollar. That level had been providing good support in a sideways trade since mid-November. This latest move lower has the euro at almost 13% below its January of 2021 high of 1.24. Now, on the surface, this move seems logical. The situation in Ukraine has much larger geographic implications for Europe than it does the US, and the recent increase in tensions has come after many months of extremely elevated energy costs in Europe already. Now, up until this point, the interest rate picture has favored the US dollar over the euro, with 10-year US Treasury yields currently at 1.9%, while the German 10-year is about 0.20%. Now, although both rates have risen significantly since their mid-2021 summer lows, the difference has remained relatively constant. Now, it's important to note that traders in foreign exchange markets use interest rate differentials when pricing forward exchange rates, and that interest rate differentials can be a fundamental driver behind moves in currency pairs. The higher relative rates are a general indication that the economy of that country is doing better, and global money, wishing to capitalize on the higher rate, is forced to buy the dollar in order to invest in the higher yielding asset. Now, if a trader believes that the ongoing weakness in the euro versus the dollar will continue, perhaps on a deterioration of the situation in Ukraine or an acceleration in U.S. interest rates, they could express that by selling the March micro Euro FX futures contract at 1.1065 and target the 2020 low congestion area of 1.08. A stop could be placed at 1.1210. This trade could make $331.25 if your target's hit, risks $181.25 if you're stopped out at your level. Now, if a trader believes that this move is overdone and that a bounce is due in the euro versus the dollar, they could buy the March micro Euro FX futures contract at 1.1065 and target the January and February highs of 1.15. A stop for this trade could be placed at 1.0790, which is just below the recent lows. This trade could make $543.75 if you hit your target and risks $343 if you're stopped out at your level.